But let's now talk about all of the cues that you really need to look at before we get into this market open. So we have Ekta, Nigel, as well as Surbhi all here to take us through the trade setup as well as the individual stocks that you should have on your radar today. Ekta, Nigel, Surbhi, thank you for joining us. And Ekta, coming to you first, we were just going through the global picture. That definitely seems to be a little bit weak as we kick things off.
Well, yes, we saw this trend taking place on Friday itself, but we did snap that 3-day losing streak that we've seen. So the markets fell for the second straight week, however. So on Friday, yes, we did see a recovery, but it was a loss for the markets for the second straight week. Sensex Nifty was down 1% for the week. Now, one of the cues which we need to watch closely is the FII's flows, because the FII's net sold for the 7th consecutive session, and FII's net sold over 550 odd crores on Friday's trading session. Now, the S&P and the Nasdaq tumbled for 4th straight sessions as well. So there is some weakness which is coming in on the global front. The US jobs data, 1.87 lakh jobs added in July versus an estimate of around 2 lakh jobs. Oil on the fringe is seeing some amount of rise, so it's risen for the 6th straight week. Do watch out for that because we are net importers of oil. Asia is mixed at this point in time, and the GIFT Nifty, however, is currently indicating a marginally higher start. Whether or not we sell into this rally or it sustains, one will need to see. Now, just watch out for a couple of cues. Follow-on moves in State Bank of India, which ended close to 3% lower post its numbers. Brokerages are largely positive on the numbers. Earnings today, we have India Cement, Indigo Paint, Gland Pharma, MedPlus, Torrent Pharma. So a lot from the healthcare space to watch out for. And we also have the RBI policy this week. So we have a lot of cues on the macro as well as the micros which are lined up.
All right, and thanks for laying out all of those cues for us, Ekta. But let's also talk about the individual stocks that we should watch. We have an entire weekend's worth of action that Surbhi is going to bring us up to speed on. Surbhi, seems like there is more disappointing than positive news on the earnings front.
That's true. So a lot of miss on the versus the CNBC-TV18 poll. Let's start with Britannia first. The results miss expectations. The company reports a flat volume growth versus expectations of 5 to 6%, a revenue growth of 8% versus expectations of 11% over there. Balkrishna Industries, the revenues were down 17%. The EBITDA was up 13% on a year-on-year basis. The margins came in at 23% versus 17% same time last year. Bank of Baroda, again, it was a miss on the poll. The net interest income came in at close to 11,000 crores versus 11,645 crores. PAT came in at 4,070 crores versus expectations of 4,600 odd crores. BHEL, the revenues were up 7%, but it reported a loss of 352 crores versus a loss of 192 crores same time last year. MapMy India, the revenues were up nearly 38%. The EBITDA came in at 38 crores, but the margins came in at 42% versus 46% same time last year. And lastly, Cipla is also on my radar. The company gets an OAI, which is official action indicated from US FDA for its Pitambur facility.
All right, Surbhi, thanks a lot for taking us through that entire list of stocks. We're going to watch for all of these in today's trading session. Finally, it's over to Nigel, who's looking at all of the cues from the futures and options space. Nigel, it was the second straight week of cuts for our own markets, but tell us how it's looking this morning.
Oh, that's right. The week ended in the red, but Friday ended well in the green, and the much-awaited relief rally that we're looking forward to, that came about in Friday's trading session. One of the root causes were that the FIs, they were net short, and they were forced to cover some of those short positions. Close to 5,000 contracts were covered on the short side, and they added close to 10,000 long contracts, telling you the swing factor was close to around 15,000 contracts odd. Now, they continue to remain net short, though, with close to 56% of their position on the short side. On the option side, they bought more puts than calls, but they also wrote more puts than calls. So that's telling you that maybe at lower levels, we've made some kind of near-term base. Which brings us to the two key strikes. The 19,500 put, well, that added close to around 35 lakh shares or thereabouts. The premium out there was roughly around 80 rupees. On the upside, the 19,600 call, well, that added close to around 30 lakh shares. The premium out there was around 60 rupees. So just plugging in those numbers, yes, we had a relief rally, but to get a further extended up move towards the 20,000 odd mark, we'll have to get past the 20 DMA first. So that's going to be the crucial reference point on the upside. While on the downside, last week's low, well, that becomes the crucial support zone. So you could say we're in this band of around 300, 330 points odd. We'll have to see which way it's going to break. Back to you.
All right, that is the big question. Nigel, thanks a lot for taking us through those cues. But speaking of cues, we also got some big ones last week, which is that Morgan Stanley upgraded India to an overweight. And in their first interview after that big upgrade, we have Jonathan Garner, Chief Asia and Emerging Market Equity Strategist at Morgan Stanley, who will be with us here at CNBC TV18 in just a short while at around 8:05 a.m. So do stay tuned for that very important conversation. But with that, we do need to get into a short break. When we return, another important piece of news is that State Bank of India reported an operationally weak first quarter. So we're going to bring you excerpts from our conversation with SBI Chairman Dinesh Kumar Khara.